Good afternoon, ladies and gentlemen. Welcome to our online panel on reimagining digital banking during and after COVID-19. My name is Remco Pieneberg, and I'm head of alliances at W.UP. We are a personalization platform. I will be moderating this panel together with my co-host. I always have to say your name properly, Kęstutis, who is the Chief Innovation Officer. He will just introduce himself.
Yeah. Hello, everybody. It's a great pleasure to have this amazing crowd and a very good lineup of speakers here. So, I'm Kęstutis Gadžiulis. I'm founder and chief innovation officer at ETRONIKA. We are for 20 years in digital banking. So, I'm very proud today to co-host together with my colleague Remco this seminar and this webinar and an interesting show. I hope that we can start. So
in the meantime, if you have any questions, feel free to submit them and we will try to answer them. And if we cannot answer them in today's session, we will try to follow up with you. So Vaidas, I give you the word.
Thanks. There seems to be some echo. Okay.
Okay.
So yeah, about me, I'm Vaidas Adomauskas, head of Revolut Business. I oversee the Revolut Business, our SME product. So yeah, happy to share our experiences as we definitely are digital. I cannot tell bank yet. We are moving to banking, but we have 400,000 plus SMEs that are using our services now. So happy to share experiences. Thanks for inviting.
Gediminas?
Yeah, I'm Gediminas Misevičius, working with open banking in digital innovation division at Swedbank. So I'm happy to participate in this discussion because really I'm working with various partnerships and bringing feature our services and products through APIs towards other platforms as well, other channels. Okay. So
thanks.
Really looking forward.
Yeah, thank you. Frank?
Hello, good afternoon, everyone. Happy to join this session. My background is for 7 years, I run the German FinTech Forum, where we have seen more than 350 German FinTechs pitching, as well as, let's say, more than 50 who actually got funding after one of our events. I'm also a member of the board of Gulf International Bank in the Middle East. They launched digital banking in Saudi. I'm a board member, advisory board member of Risk Committee at PayU, which is a global payment service provider. I'm invested in several fintechs and cryptos by myself.
Thank you so much. So Kęstutis, I give you the word. The first question.
Okay, the first question. Okay, even before the current crisis, banks and fintechs had different offerings, number of clients, business models in different countries and geographies. Asia went digital and mobile first, with a huge focus on e-commerce. Mobile payments providers in Africa were far ahead of banks. The digital banking offerings in Nordics, for example, were stronger comparing to other EU countries. So the different financial institutions in different regions faced the crisis with a completely different setup and business models and start position. It is obvious that the current situation has different impact on different countries. What are the most interesting, bad or good examples of how crisis impacts different financial institutions, fintechs and banks in different geographies? What is your take, guys? So because you have, you are working in completely different areas and regions and countries. So the question is, what is the take about?
Vaidas, what do you think? What is going to change?
So yeah, thanks. At Revolut, we are serving Europe, all Europe, and now opened in United States, so Australia, Japan, Singapore. So we see kind of global view. That's on retail side. On business side, for now, we are for business banking, we serve Europe only. We launched already a closed first initial stage in the United States. The plan is to launch this year. So if we talk only from business perspective, I assume that here, right? I'm trying to think which hat to wear. From business banking perspective in Europe, actually, we don't see huge differences across different countries. The change during Corona is quite similar everywhere. Our profile probably is a bit different from everyone. So our customers are very digital 21st century entrepreneurs so actually we didn't see a big hit in usage or behaviors, except standard ones. The card usage, physical card usage decreased, but for example, FX movements even increased, especially in the first days. So kind of and we see still a quite nice stream of new customers joining our services and growing. So probably the the biggest take is as kind of common. The digital banks or those that are having their services in digital are way better positioned to any issues. It's like this one, and surely it's a wake-up call for everyone to treat digital seriously. If anyone still didn't do that, I think everyone does now, but. So yeah, so from our perspective, we see, as I said, minor changes in spaces that I mentioned, but on overall, people still need to do banking, still kind of enjoy the services. Surely we are not doing kind of lending bit. We are not lending for SMEs. We don't have that product yet. So we are not touched by that area, and as I said, our customer base seems to be less hit by this virus because our customers are not coffee shops, for example, or restaurants that were closed, because we are serving more digital customers for now. So again, I think as we could see, the effects are very different for different verticals, and the verticals we are in seems to be handling better, although of course the general economic crisis or general less money movement is affected by everyone.
Mm-hmm.
And Frank, how do you see it in your area? In the Gulf, for example?
Yeah. No, I will give you some different perspective. So for example, what can be observed in Asia, especially India, is when we look at the payments market, astonishingly a 40% decrease of online payments. That's nothing expected. At the same time, in Europe, you see a 40% up in online and mobile and cashless transactions. So huge difference between what can be seen in Asia and what can be seen in Europe. When it comes to credit, so what's the biggest challenge for businesses right now? Liquidity.
Mm-hmm.
Right now, only one thing counts in order to survive. It's liquidity. So, and as the next step, of course, credit will become important. And at least for Germany, where we have substantial governmental packages to support the German businesses, up to €1 billion, right? It looks like that not the fintechs are the ones who providing now liquidity to the businesses, while they are still, some would be able, But we see the mainstream banks with the traditional banks, incumbents, actually doing that job, which is ultimately important. What that will mean midterm in terms of default rates, that's another thing. So right now we have a health crisis. This is the global thing, but I would expect that the economic crisis which will follow will be very different for different countries given the shape of the economy before the crisis.
Yeah, no, absolutely. But I mean, going a little bit back to what you were previously saying, and that's also a bit of a question towards Gediminas and towards you, Vaidas. Do you think that COVID-19 is shifting back the trust of people to traditional banks? Because the challenger banks are not able to provide the services that people might need right now, like credit products and savings and that sort of thing. How do you see that? Do the traditional banks actually get an advantage again?
Okay, so I think that challenger banks and traditional banks somewhat actually going to be like more similar in the future, like traditional banks creating more and more convenient digital solutions, and the challenger banks try to increase amount of services and products. And what is actually their disadvantage now, but they cover many basic needs. So even today, I would say it's a bigger trust in traditional banks generally in most of cases, because just people usually top up into those challenger banks some small fraction of money and use for some certain purpose, for traveling, for example, and main amount of money is still in traditional bank. So really not so many, or let's say electronic money institution in Revolut case probably, yeah. But because many customers are aware about this insurance. So, actually, even today we have some examples when we partner with some fintechs and when incorporate some third-party solution within our channel, the sales rate in comparison with the standalone app increases 10 times. So, and this is most of the reason is because of the trust, because customers trust solution that bank selected carefully and with all checks behind. So because banks are really, traditional banks usually focused on low risk, on trust, so that's why usually reflects in people as well.
So I agree to some points with Gediminas and disagree with some points. To begin, for example, Frank, you mentioned that only kind of let's call it incumbent banks provide loans. So I can speak for United Kingdom, where I'm located. Out of what 30 land providers, the approved by government, actually only kind of course we have the biggest ones, banks, but there is long list of smaller ones, challenger banks like Oak North Bank. So I'm not saying that in amount and total amounts the value is different, but definitely the challenger banks, the ones that are focusing, of course, on loan as the key value prop, are helping businesses, and actually were way quicker to do that and got that advantage. It's just definitely probably today, if you look how much money in general sits within fintech or challengers and incumbents, I mean that balance is obvious on the older or more established bank side. So just clear there. And I think we are serving very different needs, right? Like I'm always, as a product guy, try to think who is our customer, and I'm not arguing like our customer is still very much smaller micro SMEs that actually some incumbent banks even push to us, because it's just with their cost center, with their unit economics, is no value to serve some company that has 10 software guys, building websites, having a few million of revenue and don't need a credit or loan, because it's just very, very actually not a good business case for any bank, because their costs is built different way. On our side, we are targeting these type of companies, because if you're onboarding 500 new businesses a day, and we charge them 25 or 100 pounds per month. So we get unit economics totally different because everything is automated with us. We have some automated flows, and they are still, of course, very much more simpler than for bigger companies. So I think we are targeting very different niches now, and that's good. We actually, the way I see, Uber didn't kill taxis, Airbnb didn't kill hotels, so challenges won't kill the incumbent banks. It's just we expand the market, we serve that niche where it was underserved. There were so many spaces that could have used been for renting and were not, and Airbnb solved that, like increased the economy, right? Allowed people to new ways of earning money. Uber the same. We all are happy that we have no more options to choose for our travel. So I see the same synergies going forward with all the banks. Surely they will serve more complicated customers, bigger ones, while challengers will fill the more smaller ones, the ones that need quicker response time, better kind of UX and all that stuff. So I agree on more cooperation and actually helping each other rather than fighting a lot. Yes, some parts will overlap, but most, I think, are based on what actually customer segment you are targeting.
Mm-hmm. Good. So it was an article by Jim Merrows actually this week, based on research by JD Power about the gap in between the capabilities of small and big banks to become true for digital at the core or to be inventive. And what I saw on the web that Frank made a very good summary telling that COVID-19 crisis will accelerate the evolution and further development as well as extension by several years. And this means that there will be some consolidations in the market, some M&As, and banking industry will increase faster. So we will see that retail bank branches will go down and the number of branches will decrease. Fintechs with great business models will grow faster. Those who have bad business models will die faster, of course, and all the digitalization will happen faster. So I'm curious, and I want to ask, does it mean that we are facing the next biggest evolution of financial services after year 2000 when everyone went online? Then it was 2007, 2008 when we faced banking crisis and saw the birth of smartphones. So are we facing the next big leap for the mankind actually in financial services now?
Okay, so I think all this like COVID-19 will really helps to accelerate all those digital technology, how to say, developments, because we as Swedbank are really good, really well digitalized bank. We have lots of services available online, but still some cases we see that we still used to solve some cases in branch. So then we're looking into those cases, how to remove obstacles of serving customer. If we cannot identify him, how we can identify some other ways to serve them remotely instead of branches. So if customer behavior will change appropriately to that direction, so the continuation of reducing of amount of branches probably will continue, because you know, if we take the last 10 or even 20 years, so amount of branches were going down in those traditional banks, so in most of the cases. So I think this trend could continue, but it really depends also on the customers. Do they prefer coming like physically, or still okay to be served online if that is possible? And but about small banks versus big ones, and of course it's you know, in digital area, let's say in digital technology areas, there are just several. There is a place only for several players in the world. Let's say if we take search engine, it's like Google and Bing, and maybe some Baidu in China and some in Russia as well. If we take social networks, Facebook, Tencent, Twitter, Instagram, and some others. But in banking world, it's not possible to have this because it's lots of different legislations, and I think those local players will continue to exist. But again, for bigger ones would be much easier to have efficiency because of economies of scale, and small ones could really have more troubles. Also, bigger banks, usually those they have a lower risk appetite. Smaller ones wanting to penetrate into the market have a bigger risk appetite, and they are issuing loans for more risky customers with a higher margin. And this situation could show that bigger percentage of those loans could be not returned. So, and yeah, like in previous crisis, so the weak banks will really have troubles, but the strong ones will survive. So, and also, weak ones could be also acquired by other ones. So mergers and acquisitions could happen as well. So I agree with that.
Frank? Because I saw that you.
Yeah, I think I think it's very dangerous to think now linear about the future. And I would always recommend and think of scenarios. I personally don't believe in we go back to normal. First of all, there is nothing like a normal. We see ever increasing change in all aspects of our life, personal life as well as business life. First of all, I don't believe that this crisis will be over fast. This crisis may last for another 12 months or even 24 months. So we will face a total new dimension of challenge which we have never seen before. As we see in financial programs, we have seen never before. The amount of money central banks currently printing is from the magnitude significantly higher than in 2007, where they only needed to save some banks. Now they need to save pretty large chunks of businesses. And we have not thought through the effects of the money printing yet, and what does this mean to banking. So, and it will mean something, depending especially on how long the whole situation lasts. And just in the situation that we are now here in a video conference, this would not happen without that. My children, half of the day were in video conferences.
Yes.
If this situation keeps on going for the next 12 to 24 months, every single person figured out how to live without going to physical branches. And this is something people were never forced to. They always could go into a bank branch and they were used to, but now they got into new behaviors. So we will see in many aspects significant different behaviors than before, whether it's travel, whether it's physical meetings, whether it's office space. Models like Airbnb will not work anymore, at least during the crisis. And the question is whether models like this can survive the crisis. And therefore, let's say everybody would be, let's say, or I recommend to everybody, start thinking in scenarios where you also try to generate your worst case scenario and then start from acting there and hope for the best.
Yeah, so I agree with the statement that kind of every crisis is a jump in innovation. I agree with Frank saying that there's never normal tomorrow. Even if in normal days, it's not normal. I mean, people learn new skills and they adapt. The only question is at what rate. So if we look any day before crisis and we look 1 year back, we see already the change in people behaviors, in new habits we learned. But like just again, personal experiences, right? We learn now new tools, most of us today, which we would never learn except this crisis. My mother is a school teacher and she's 3 months before the pension and she had to learn to use Zoom. And she would never, ever learn that, right? Because it was literally 3 months to finish this year and then it's done. I mean, I done my all life job. And of course I helped her and teach her. And now we had an Easter with Zoom and I'm living in another country and we'll use it more. We used, of course, Skype before and whatever, but it kind of pushes people to different limits. So basically, yeah, we will accelerate. Where? It's a question, as we all kind of ask, but it will be the same direction as going. It's more digital, more online. I also don't buy the argument that everyone now will stay online and people won't go to the offices and, you know, we will start understanding that remote work now is kind of everything. I think it's not neither black, neither white. People, we are still kind of social animals. Yes, we'll be afraid a bit to go to cafes for the beginning of big events, but we want to get together. We want to meet people physically. So if we will have a chance, next panel we will have live, right, guys? Because it's totally different way when you are sitting next to each other and can challenge that. So technology helps to accelerate many things, but not solves all of them. So that's the same as financial. Some things will stay, but surely, like was Gediminas said, everyone, it will increase the speed up the decrease of the branches. It will increase the trust of people in digital services, because once you used it 5 times, it just works, right? If my mom again used the same Revolut app, I mean, because now she had to, it just works. Now, for example, in just 2 weeks, as you asked about innovation, is it quick? You know, we changed and we started issuing everyone by mandatory a virtual card, because till now we always issued you physical card and we thought that's fine. You know, as a customer, as a business customer, you get it and use it. Now people cannot get it because we send it to their office and they cannot go there. So we immediately send them the virtual one that you can send automatically, start using from kind of minute you onboard it. And actually, even ourselves, we have sit on the data, we look back, 98% of transactions are online anyway. So why would you use a physical card for that? It's a wrong tool. We just use it for the historical reasons. If we give you the right tool now, you'll start using it and the number of virtual cards will increase. So yes, I think this is a huge leap in innovation, huge leap in acceptance or usage of the digital and kind of more quick financial services, but it won't be 100%. There will be branches, there will be people that will go back, and we have kind of to find this balance. And that's, again, I'm very happy that we have challengers and incumbents, and I think there is so much room for everyone to serve the customer needs.
Yeah, but do you?
Hey,
yeah.
Can anyone hear me?
Yes, Linas is connected. Yeah.
Hey guys, yeah, sorry for interrupting. Yeah, so I was listening actually the whole time, and I was not sure whether you or anyone else can hear me. So apologies for not showing my face. I have issues with the program, but either way, very quick intro. So I'm representing Flutterwave, which is a payments tech company. We started off with trying to bring the fintech revolution to Africa, and right now we are expanding our mission to do this globally. And yeah, I'm working on expansion into Europe, and jumping straight into the discussion and maybe giving some thoughts on what has been already discussed. So I would just want to add one thing, right, to what you guys have mentioned, is that I believe that, you know, a quote by Bill Gates or someone else saying that we tend to, you know, overestimate what happens in the short term and then underestimate what happens in the long run. And right now, many of us probably think that, you know, this might accelerate and change everything very much. But actually, one very big paradox that probably all of us have observed, that maybe 10 or 20 years ago, we thought that we will be having, you know, fully electric cars, maybe even flying cars. But hey, we are now being taught how to wash our hands and you know, do very basic stuff. And reflecting on the branches and that kind of thing, I do believe very much on more focus probably on the omni-channel experience. It's being very much developed and being evolved in terms of e-commerce. And what we see as a good example is coming from Amazon, which started off online only, and now they're going into retail. So probably the same might be very much applied to the banking world. I haven't yet seen this coming from fintechs. Maybe from the more traditional ones. You know, we have Pisera, which has a branch. Maybe some other guys from Europe. But I do still believe, you know, that the branches and human contact might be very important for some parts of the population, while others go fully digital. So yeah, just some quick thoughts, and apologies for some silence from my end.
Okay. And now we see that it is we all are moving towards electronic means of communication, actually, and doing business online. Banks and other financial institutions are focused around the products and offerings. And I want to elaborate a little bit on the technology side, because, okay, actually, I don't want to think about banking products. So because now I'm facing the crisis, I have a lot of problems, let's say, or challenges in my life, and I want to live my life without thinking about banks. And do you think that now it is a great opportunity to move towards invisible banking, towards embedded banking, and to allow customers to focus on their life and challenges, where financial services are invisible, actually, embedded in our daily activities, where we need those services. And maybe it is a time to think about a semantic banks and semantic banking. So, because nobody wants to learn about new financial products, or maybe new financial products are created especially for COVID situation. I want to cope with my problems and my challenges, and bank must come somehow invisibly and help me at this particular moment of time.
Yep.
When I
Well,
need
but
it.
the only way that the banks can do that is if they would have the technology to be able to, based on data, reach out to you with personalized and relevant content, right? But I don't see a lot of banks that actually have this kind of technology in place. So I wonder if the banks have the real capacity to really reach out to you at the moment you need it during the COVID-19 situation.
Yeah, but yeah, go ahead.
Okay, I just wanted to, so I'm really a true believer of this embedded or invisible banking, when like banking products are available in the places where customers are when they want to buy something and want to get some service, and financial part is embedded. For example, if you want to buy a car, you could check ability of getting leasing straight into the Toyota side, where API connections to bank allows to do personal calculations for you. And then after some automated decision, you could just click and order that. So I am really a believer that in the future, those times when customers are pushed to go to the banking channels as internet bank, mobile bank, to fill in the forms and get apply for a loan or something like that, will be not that popular, because customers will search for embedded banking. And nowadays, actually, let's say bank link service that is really convenient way to pay is also embedded banking, just transactional way. So now payments are actually already embedded into merchants' places. Like in Baltics is BankLink, in some other countries also some card payments more popular. Now some PSD2 APIs appears in the market as well. So it's also embedded. It's transaction or the services within the bank, but it's kind of integrated that you don't need to fill in amounts, to fill in the account number, fill in where to transfer money. So the same way integration should be with all other products. And we are doing steps towards that direction. And so I cannot disclose yet, but some APIs are on the way. And actually, it's not that fast as we would like to have because of our legacy systems, because of our processes and some decision making. But because, you know, fintechs, even two co-founders could fight for their opinion which way to proceed. But, you know, when the big companies, lots more of opinions and more discussions. Also, low risk appetite and high security standards does not allow us to do it too fast. You know, opposite to fintechs that usually, okay, let's launch, let's go to market with the best experience, and later on, if some issues, we will fix on the way. So it's a bit different approach. And to fight this legacy of IT systems, we're also switching to API-based infrastructure. Okay, it will take years to get there, but afterwards, all those integrations, making those external APIs would be much easier and faster to do. Okay, we're talking long, so give a word to someone else.
No, Gediminas, you're right. I think I support you, and I think again the Kęstutis, you're phrasing the question a bit like true or false. Is it yes or no? I think it's like raised our previous discussion. It's a journey, and we're not switching to it one day. And I see so many areas we already switched. Just think about shopping. 3 weeks I haven't been in a mall like now in a shop like, and my wife doesn't think that she pays for groceries. She orders them online and they deliver to the doors, and the payment is already invisible. We don't think about payment anymore, right? The same as Ubers were before and stuff. So there is lots of areas where it's coming. And surely it's a direction where world will be going. And as we just discussed in the previous topic, probably this COVID situation will accelerate that. And again, Gediminas is very right. Like, for example, new challenger banks definitely have already all customer data thought through, right? They already integrated. We got kind of, as I said, even example, not us, but like North could provide these personal loans like in 3 days, very quickly, very clearly underlines what, where, and if you need. On our side, we don't use any jargon or whatever on the banking. So we build the bank from day one, not as a financial platform. It's you're running your business. If you are a software developer, you don't need to know in very detailed financial sector and BCFO to log into your bank account. For example, you know, when you create an invoice, it becomes kind of, you click one button, it goes to another Revolut Business customer on the other side. They have 3 buttons: schedule, decline, pay now. That's it. All both are reconciled, done. So I think, Kęstutis, you are pointing right. I think we are going as financial sector to this invisible and less kind of trust banking. But again, customers need to trust it. You know, you need to understand that I give some of my consent to be kind of behind the scenes. Once I put my car to Uber app, I don't think about payment, but I have to trust that Uber app, right? That they will deal with it correctly. And this was hard for some people. And again, using my mom's example, if she did it once, then she said, oh, it really works. I can do it for other provider and go on. So it's a combination of all. And yes, I think this situation will accelerate that. And yes, as we discussed, challenges will be quicker, will take the long-hanging fruits and markets, while banks will build more solid, kind of bigger solutions and serve some kind of different needs. And we will work together.
Yes, but this collaboration between bank and fintechs has always been extremely difficult in the past. Do you think that because this has been so slow and difficult, that it has limited the bank's speed to respond to COVID-19?
Again, we're talking about, I think, context. I would argue which fintech has launched without the help of the bank. We still need to collect somewhere with the money and stuff. So if we talk in a generalized manner, yes, it's still an issue because to some extent we see ourselves as competitors, but at least I'm talking from our side, I think Gediminas can comment. But on the other hand, there is so many synergies and participation, and I think again those that look for opportunities to work together rather than to be direct competitors are winning. And again, if the same like Uber, should taxis fight against Uber or adjust their models to actually serve together and serve different needs? We all believe taxi is still needed, right? I don't think anyone argues that taxi will be extinct for very quick. So yeah.
let's say, first of all, the landscape already changed dramatically. So with respect to branches, if you look 20 years back, we now have less than half of the branches.
Yeah.
Less of half of the people working in traditional banking. So it's not like there is room for everybody and it's just a matter of perspective. No, there is huge change going on. For traditional retail banking in 15 years from now, there will be no branch because nobody can cost efficiently and cost effectively deliver the service. That means, of course, there are still some branches, but they will serve total different customers and with a total different, let's say, business model. So, of course, for rich businesses and private banking customers, they will still have the opportunity to go to a bank branch to get proper advice of a fortune they have. But let's say for the ordinary, let's say, retail customer, no bank will be able to afford 1 hour of personal advice. Because if you only have 10 euro or 50 euro a month to, let's say, for free money to invest, you cannot just pay 200 euro just for that 1 hour of advice. So there are things going differently. And just on the comment, all fintechs need banks. Let's say all payment service provider don't have any banking, let's say, backing. So, and a quarter to a third of the early fintechs are somehow payment related without any, let's say, bank as partnership. Of course, they have a bank account, but that's not the point here. So there's a lot of things happening, and I also don't think that we have hundreds. In Germany, we have more than 1,000 fintechs. Actually, in the last 3 years, already 200 did go down. And again, that will also accelerate significantly. There is no room for 800 fintech business models in Germany. Not even in Germany, and Germany is a pretty rich country. So there may be room for 12 good ones and maybe 50 to 60 ones who somehow identify their niche and have a proper service. But that's it. No way that the still 800 survive. And that is now in context of the COVID discussion, a different thing, because what we have thought, because what you have seen still beginning of the year, end of last year, a lot of new funding, let's say, highlights, biggest funding ever. And I would argue the next 12 months, you still see funding, but very selectively. And we already see a super sharp down for early stage venture. So right now, more or less every VC and every family office, they concentrate on focus on their existing portfolio. Even in the existing portfolio, they sort out. So they focus on the ones where they believe they are, let's say, best for this next phase, and the rest will basically go out of cash, will face the liquidity challenge and go out of business or taken over by a competitor with significant cash. And I also know from many discussions, there are some cash-rich businesses out there. So there are people out there, they still super cash-rich, and they now already start looking which, let's say, opportunity this crisis provides, because people go out of cash. So we see really tremendous things happening, and it's not a time where it's not business as usual at all.
Oh, Frank, would you start a new challenger bank or financial services company now? Oh, because you started and you was the feeder bank during the last crisis, actually, when the feeder bank was started, actually, in 2007, 2008. Or would you start a new challenger bank now?
Let's say I'm helping some. So, so yes. Right now, I think one of the things which will, in 10 years, when we look back, what we will then say what was born in that phase was the digitization of assets. Not because it started now, but if you look at this, the crypto valley in Switzerland and Liechtenstein and Luxembourg, there you already see around about 800 startups in that field of digitization of assets and crypto. And this will accelerate as well. And some of them, maybe some names like SEBA Bank, but also many which we don't know yet. It will, in 10 years, we will say that was when they were born. That's not true. They were born a couple of years before. And also Fido Bank was initially founded something like 2013, 2003 to 2005. The first community was I know that because I worked for Fidor and I was deep in the discussion with the founders. So Matthias Gröner started the first concept in 2003. In 2005, the community started. In 2007, they added on new features, and in 2009, they had basically the banking license. But the idea was, and I think it's a very nice reference. And let's say, as we think of Fidor like the first of its kind around 2010, we may see the one or the other. I would say SEBA Bank is a good reference. Maybe also Bitwala in Germany, which is a very integrated crypto and fiat bank. So these are the kind of things which will be the ones which we say, wow, that was not around before. In 10 years from now, digital asset will be part of our financial system.
Thank you.
There's also one question that I had to you, Vaidas. There's been a lot of discussion around the profitability of challenger banks. And do you think that COVID-19 disrupts them from having their current evaluation, sustainable business models?
Yeah, very good question. And when I read the comments, it's very interesting to see when people comment without understanding the revenue streams or business model of these challenger banks. Probably everyone assumes that the only revenue stream is card interchange. When you read comments, at least, so I'm not referring to your question. And yes, probably for some challengers, there is only revenue stream. And then, for example, now when all card physical card spend dropped, it just drops dramatically. And again, if Revolut would be, 3 years back when we started on retail side again with a kind of travel card value proposition, then it would be very hard times, because definitely travel is killed now. But because, for example, we matured on retail side, we actually are being more and more as primary bank accounts, as primary source of funds. You can do crypto, gold there that you guys were talking about. So all place for all financial stuff that you discussed. So we have different revenue streams, including kind of monthly subscription fees, and they are a big part. On Revolut Business side, I actually got 3 times asked by journalists in one interview, so guys, how are you going to build it without kind of the loan book? Because every bank has to build on loan book, right? That's the way you build a bank. That's the main cash cow. I said, yes, everyone thought that, the retail or music has to be built on different model, but Amazon gives you Amazon as a subscription fee and so much content within that, right? So in Revolut Business, for example, our revenue grew despite the fact that card transactions decreased, because we have subscription model. People pay a monthly fee happily, or as I said, on the scale basics. Our costs are very, very low, and our business model is totally different. Yes, we will have loans, we will have that part of revenue, but we're not building that as a main. So if you drill down, the question is, what you're asking is, what is your kind of business model, on what revenue streams you're building it on, right? And I saw actually quite a few banks that on different revenue streams. And then it's much easier to live through these tough times. If your only revenue stream is card interchange and you have only physical cards, surely that's a very, very bad position to be in. So yes, Revolut just raised 500 million. So surely we I think in a very good position, did it on the right time. But even coming back to Frank's comment, you saw Stripe raise after COVID 600 million, right, with 336 billion valuation. It just shows that online is so much in need now. So that value prop becomes so much needed because so much more like online transactions boosted. So that's just a proof that there will be consolidation. Business models that are built for more online kind of digital services will accelerate. Those that were built more for physical world, including fintechs. If your main revenue stream is physical card interchange, then you are built for physical world, right? Despite you have it on mobile app, then you have the issue. So again, question is where your revenue streams come from. On Revolut, we have diversified it quite nicely. So that's why we are stronger and stronger growing to build the first truly global bank.
Mm-hmm.
Okay, thank you. I
And
also
what
have
about valuations then of those challenger banks and these newcomers? So because we saw quite a huge valuations just a couple of months ago, and what is happening now? Linas, what is your take on that?
Right. Yeah. So actually, the thing is that, and it applies to every business. So when everything's fine, as long as, businesses are successful in raising new funds, you will never get to know the real story, right? But when some challenges hit, then we see, the real stuff happening. And it doesn't matter, whether you have streams of income, whether you have diversified. The key thing here is whether your business model makes sense and whether it can be a sustainable business. So one of the examples which I have just checked, so Stripe, which has been mentioned previously, raised a lot of cash. They are, I don't know, 40 or 50 billion company. I'm not sure about their figures, but for example, Adyen, which is in relatively similar spot, they IPO'd not that long ago. They have not much, but 10 or 12 billion smaller market cap, but they are profitable, and they are profitable for quite a while. Another example, which I told you actually, Kęstutis, when we spoke before this, is that half a year ago, we had WeWork, which was a technology company, which was sold to every VC as, I don't know, the next big thing, right? And now, 6 months later, WeWork has plummeted. Past valuation is even higher than all of the 6 biggest airlines in the US. So this is very interesting times, and we see a lot of companies which appear to have sound business models, which had good value proposition. The same Airbnb, which needed cash, and now their valuation is, I think, half as it was before. So this is a very good time to see, not only for companies, but for VCs, for the general public, who's actually who and who is delivering real value. Because to raise money and to spend money on your marketing, on your product, it's okay. But when you have to maintain your business and grow your business from what you earn, that's another story. So I would like to think, and I would like to see that this crisis and this situation will sort things out and show us who are sound, profitable businesses that are able to provide big value enough to be sustainable and to be growing from their own operations, not just raising a lot of money from VCs, which just have too much money to spare.
Okay, thank you.
Also, I got a question from the audience. They asked everyone expects.
Frank, sorry, I just will need to jump off as I have a kind of sharp other meeting. So I just wanted to thank for this opportunity. If you can, guys, to finish without me, I would appreciate. So thanks a lot for invitation, and yeah, good luck in these tough times.
Okay,
Yes,
thank you.
Thank you for joining. Yep.
Thanks,
Thank you.
Vaidas.
Bye.
Bye.
Yes, Tutis, is there any last question you would like to ask? Because we're running out of time.
Well, go ahead, because you had one question, I thought. Yeah.
Yes, I had one question. It's everyone expects COVID to drive acceleration of digital transformation of traditional banks. What will make this feasible tomorrow post-COVID, which they could not achieve over the years and continue to be busy with the existing legacy processes and systems? Are there a few silver bullets you see which we are not able to see? That's my question to Gediminas.
Okay, so yeah, I think it will accelerate. Actually, COVID-19 showed clearly the cases, what types of services can we provide remotely, and still the ones that we cannot. Usually those small fraction of the services that we cannot provide remotely, let's say one person lost his identification means. Those type of services actually, yeah, it's some workarounds on that. So for example, there was no such form of if you want to go to loan vacation, there was no form to fill in. It was kind of manual process. And then in the face of COVID, we managed to create these forms really fast for customers, just to enter all information in digital channels and submit that. So definitely the COVID-19 showed that we can also act fast in some cases when we need some functionalities right here, right now, and we can do ourselves. When it comes with a partnership, that it's still could be fast, but not that fast as do it ourselves with our own resources, because we need to check lots of things around. So yeah, definitely there will be acceleration, so no question.
Yeah, because I think that traditional banks are at a critical juncture. They must embrace open banking and personalization, or risk becoming irrelevant in order to keep up with the everyday changing customer expectations. So I think that incumbent banks must transform into innovative organizations with collaborative support from fintechs. That's my take on it. But gentlemen,
I would argue that given the size of incumbent banks and traditional banks and the size of fintech, there is always a huge cultural challenge to efficiently and effectively work together. Actually, there are only a few selected good examples where the offering is more from a technology point of view and more complementary and not a competition situation. This is where, but even in these things like providing API, providing, let's say, personal finance management and things like, but even in these complementary, let's say, functionalities, at least for incumbent banks, we have not seen a lot of very successful examples, and that has to do with culture. So going forward, I would see what Gediminas said, that banks have understood because of the crisis, their gaps when it comes to digital much clearer than before, because branches were closed. And what I can see from the different, let's say, parties I'm involved is that the banks now, let's say, prioritize these gaps much higher than before and much more focus. So actually, I see a bigger advantage for the incumbent banks than for the fintechs, because they only have to close a gap. I don't speak about niche, I speak about, let's say, mass business. And the real danger for banking or established traditional bank is from the large tech. not from the FinTech. So the Apple, the Google, the Amazon, they now really gunned, right? When it comes to payments first, identity second, simple loan third, and if they go and they increase their share of wallet as well as PayPal. Look at the business volume of PayPal in Germany. It's unbelievable. Basically, it's by now, I would say, the third biggest or fourth biggest bank in Germany, but nobody looks at PayPal as being a bank.
Yeah, that's true. Yeah,
That's great.
Yeah, very interesting, gentlemen. I think we've come to the end of the session. So I would like to thank you all for participating today. I think we had a very good discussion about how COVID-19 will impact not only banking, but the entire FinTech industry. My conclusion is, and you might actually agree with me, that this might actually be a really good opportunity. It will accelerate digital transformation. It will allow FinTechs to work probably more effectively with banks. There are going to be perhaps more opportunities than disadvantages. That's my key takeaway on this.
Yeah, I completely agree.
Yeah, all right. So if you don't have anything more to add, then I would like to thank you, and we will send you a follow-up on this. So gentlemen, thank you for your time today.
Yeah.
And
thank you.
Stay safe and healthy.
Thank you.
Stay safe and healthy.
Bye-bye.
Thank you.
You too.
Bye.
You too.
Yeah.
Bye.
Bye-bye.